Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, so the non-commercials. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside were created. Every time that the market tested this zone, it got rejected to the upside quite aggressively. And we can see how right now the market is testing the exact same zone, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this level. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the structure is quite clear. We can notice how all this area is a quite strong structured zone for this market. Inside of here, the market has been moving horizontally for many weeks. And now the market has broken above the zone and is retesting this demand area as support. So as the market is testing this demand and support area, there is good probability of seeing more bullish price action being created away from the area and the market being rejected away from this zone. We can also notice that from a pattern standpoint, we have a clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can adjust our zone even better because we have the 0.32 and 50% retracements lining up exactly with this demand and support zone horizontally, and that creates confluence of support and demand because we have the Fibonacci levels and the horizontal support both lining up in the same area of price. And inside of a confluence of support zone, there is an increased probability of seeing institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. Now, why do I say a confluence of support and institutional longing? Because those two things often come in pair. And in fact, if we go and see what we have when it comes to the commitment of traders, so what hedge funds, so the non-commercials, the big speculators in the market are doing on the NZD, we can see that they have been in fact longing. Now, keep in mind that if we are looking at the data for the NZD, we are already looking at NZDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased, going from minus 16.7k all the way up to 238. So essentially, institutions have been moving aggressively to the bullish side, increasing their longs and decreasing their shorts. We can see, in fact, how just with the last report, institutions have added 4,500 longs and closed 3,400 shorts. So at the moment, institutions are clearly moving to the bullish side for NZDUSD, and they are very close to shifting to a positive net positioning from the very negative net positioning that they had here. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, we have to identify how the structure is still bearish. Until the market will remain below this previous daily support turn resistance, this market can easily continue lower. However, if we get a break above this resistance, that is where things get interesting, because after the break on the retest of the previous resistance turn support, that is where there is good probability of having some more potential institutional longing, at that point further increasing the probabilities of a potential rejection to the upside away from this zone. So If the market does break above this level and go for a retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.